We're joined by the top management of HCL Tech, C. Vijay Kumar, the CEO, and Prateek Agarwal, the CFO. On the face of it, these are very good numbers from HCL Tech, joining its peers in the IT pack. Revenue numbers are above what the street was estimating. They've also increased their margin guidance at the upper end and also their revenue guidance for the rest of the year. Let me start with you, CVK. Tell us about the quarter gone by, the year ahead, in terms of the transformational deals that you have signed, and how would you really define transformational deals in terms of size? Are these large deals? Because you've signed, I think, almost 11 transformational deals according to your release. So tell us a little more about this.
Yeah, Chandra, first good news for the year is we crossed $10 billion milestone. It's a momentous milestone in our journey, and I want to thank all our employees, partners, and all our clients for the tremendous confidence and trust that they've had in us. So it's a great occasion and a tremendous milestone, and we are very, very happy. On a 12-month basis in calendar year 20, we crossed $10 billion. Again, the year has started on a very good note. As you would see, our revenues constant currency 3.5%, 4.4% in US dollar. Our EBIT came in at 22.9%. It's again 130 basis points higher than the previous quarter. What is most significant about this quarter was our Mode 2 and Mode 3 businesses are really firing on all cylinders. Our Mode 2 business grew 10.9% quarter on quarter and 25% year on year. This is largely led by digital transformation programs, cloud migration, security, IoT, all the new things where we took some strategic bets and made significant investments in the last few years are really now coming to a great, contributing to the great momentum. The second, products and platform, the stellar performance this quarter, almost an 8% quarter on quarter increase and 9% year on year increase. And this is, there is very few businesses. In fact, I can't think of anything in our peer group which is growing on a year on year basis at 8 or 9%. That's because of, I mean, we've made some strategic bets in investing in IP. Those products are becoming a lot more relevant in the pandemic world, whether it is commerce, whether it is security, whether it is low code, no code platforms. All of them are seeing great traction. We won about 700 customers for our software product business. And the TCV that we closed is 3 times the TCV that we did in the December quarter of 2019. So it's a huge momentum in the product business. And we feel fairly vindicated, though there was a little bit of skepticism from certain pockets. Last 6 months has really proved that it's a very robust business, and we feel pretty confident. We signed 13 transformational deals.
That's right, 13.
Yeah, we define it by, I mean, earlier we used to have a slightly lower threshold, but this time we've taken a threshold of $25 million and above. And these deals would involve not just about, some of the rate card based deals, even though they're much larger, we don't consider these are transformation projects where we have a signed commitment. There is a clear outcome and transformation that's part of the deal. Our overall bookings is about 13% higher than the last year, same quarter. And our pipeline is very strong. We think the booking momentum will only accelerate from here. So all fronts very positive. We continue to feel very excited about this momentum, and the journey really continues on a very strong footing.
Right. I'm going to come to the products business in a bit, because as you said, there was a skepticism on whether the momentum here will last, the resilience of this particular business. But CVK, I also want to ask you about the deals in the market, because in the last year, we have seen these billion-dollar deals come back, particularly from continental Europe. The nature of deals is also changing. So, you are kind of buying out captives, rebadging employees, getting a contract as part of that. What opportunities do you see here in terms of these mega deals that are coming back in the market?
Yeah, I mean, I talked about it in the last couple of quarters as well. Two broad contours of deals. One is around bringing in more efficiency, vendor consolidation, cost optimization. That's one type of deals. The second one is really investing into the growth and digital transformation and cloud migration and long-term kind of right investments to enhance customer experience, enhance new business models, revenue streams. These are the two types of deals. And uh, last quarter, particularly, we saw a lot more traction in the second type of deals on the digital transformation. And that's why you will see that we have a 10% growth in a quarter-on-quarter basis and almost 25% growth year-on-year basis in our Mode 2 services. And continental Europe continues to be a very promising region for us. We also did a very strong deal activity in the region in the last quarter, and this quarter continues to be very promising. Already we've started booking deals, and this quarter is very promising across the world, not just continental Europe.
So will you be looking at these kind of deals where you acquire and then kind of rebadge, or are discussions on, are more of these opportunities opening up? Because I think global companies kind
Yeah, I
of
mean,
want to bring in efficiencies.
Chandra, we
They're
were one
being
of the
let out
pioneers
there.
in we were one of the pioneers in doing large IT outsourcing deals. I mean, several years back, we had announced Volvo, which was one of the most
Correct.
transformational and large programs. And I mean, we have done this well. We can handle very large transformational deals. So now that's further accentuated by a lot of digital transformation and cloud migration work. We built a very strong ecosystem of hyperscalers, partnership with hyperscalers. In fact, we were again one of the earliest to set up dedicated business units for Google, Microsoft, AWS, IBM. So all of them are strong capability units which are feeding into some of the transformation programs. So we are definitely looking at all of these aspects as we pursue this big momentum in the industry.
Right. Prateek, coming to you, margins, of course, are one of the standout this quarter, 22.9%, way higher than what people were expecting. But for Q4, you have guided to 21 to 21.5%. So again, take us through what's happening here. Do you expect margins to perhaps come down with a vaccine rollout, more people traveling, working out of offices again? What other metrics can you possibly use?
Yeah, Chandra, thank you. You are absolutely right. 22.9% is a very gratifying number. Even better is the EBITDA number, which I prefer to look at because that is more closer to the cash generation of the business. And that number in Ind AS terms, IFRS terms, is actually at 29.1% for this quarter. And that is on top of the calendar year number being at 27.5% in EBITDA terms in Ind AS methodology. So Ind AS EBITDA 29.1% is helped by a lot of improvements in the business, the level of offshoring and all of that, and also takes into account the impact of the salary increments that we gave to the part of the population in this quarter. There are more increments lined up for a separate section in the next quarter, and that is all factored in. And all the factors put together, we have increased our guidance. Last quarter, we said for the full year, we will be 20 in a range of 20 to 21. Now we have taken the upper end of that range to be now the bottom end of the range and increased it to 21 to 21.5. So I think that is reflecting the strong performance in the 9 months year to date. as well as what we expect as a range in the next quarter.
Right. But I think one aspect which the street is slightly disappointed with is your capital allocation policy. Some analysts feel that the blowout has been fair. People were hoping for some kind of announcement. What would you say to investors at this stage about your capital allocation policy?
I would like to remind our investors, shareholders, and analysts that we are just looking for the best interest of all our shareholders, because as you know very well, Chandra, and everybody knows, the net takeout for the investor is better if the share price increases and capital gains taxation is lower, much lower compared to the tax that ultimately it goes out of the pocket of the shareholder. The tax on the dividend or buyback is much higher compared to the tax that they pay on the capital gains. So I really don't fully understand why this keeps coming back, because it's much better for the investor.
I hope they are convinced with that answer. But in terms of hiring plans, CVK, coming to you, a lot of robust plans have been announced in terms of hiring by other companies. We expect it to come back in large numbers. Tell us about HCL in terms of freshers, laterals, how you're seeing this panning out.
Yeah, Chandra, we hired, the net addition was around 6,500 people.
Yeah.
The gross hiring would have been about 12,000 people. And I think our hiring momentum is only going to increase. In this quarter, we expect to hire at least a net hiring of at least 8,000 people. That's what we expect. And it will only scale up in this Q1 of the next financial year. We have something like 20,000 positions demand for various programs for the next 4 months. So there is going to be massive scale up that's possible based on the demand environment that we are seeing. And from a fresher perspective, we had a goal to have about 14,000 freshers in this fiscal year. And I think we still have some more to cover, maybe another 4,000 more this quarter is the number that we are looking at. But these are approximate numbers. I do not have the accurate numbers for this.
Okay. I'm just quickly jotting those numbers down. But CVK, this point is something that you touched upon earlier, the outlook on your products business. Now,
yes.
In recent reports, the street wasn't as optimistic on the resilience of the products business. So what has really changed? What are you seeing on the ground to give you that optimism on Mode 2, Mode 3? And also, are there post-COVID changes in terms of the ERD sourcing strategy of clients?
Yeah, I think, first of all, Mode 2 is all about digital transformation. That was always growing very well, 10% quarter-on-quarter growth, 25% year-on-year growth over the last many years. Now, products and platform, if you look at all the Indian service providers, largely they're focused on services, and we took a slightly differentiated strategy to invest and create market permissions for products and platform. So we took some big bets. The IBM divestiture of some of the products, it's about 18 months old. And now there are last 2 quarters, which is Q2 and Q3, constitutes what we call as 2 wraparound quarter comparison after 1 full year. And if you take the 6 months year-on-year growth is about 13%. Now this goes to validate this is one of the fastest growing businesses for HCL and even across the industry. And there are many reasons, right? We have executed very well over the last 2 years. We focused on a strategy. We narrowed down on the innovations that we want to invest in. There are numerous new product releases which happened. And this quarter, particularly, the booking momentum was very strong. And it is across a very diversified customer base and for all different products that we have. And especially in the COVID environment, the resilience of these products, the mission critical nature of what the products are delivering, like The commerce engine is the backbone of so many B2B businesses that use this product. BigFix is a hugely critical component in the IT infrastructure landscape for the endpoint protection. The AppScan is again a strong tool in the DevOps life cycle. So all of these are the modern versions of these are really cutting edge, and they're the top quadrant of all the analysts. And that's why you see a lot of adoption from customers. And we knew where these products were really being used, and we took a right strategic bet, and we've invested behind making this business really happen. So obviously the results are now showing.
Right. Your guidance, you've raised guidance for Q4, but some of the most aggressive brokerages were actually expecting it to be even higher, almost 4 to 5% and above. Is there something that kind of made you stop short of that? Any headwinds in Q4? And most importantly, CVK, a lot of your peers are talking about how double-digit growth will come back in FY22. But do you share that belief? Do you think FY22 is going to be the year for double-digit growth for HCL, for the industry?
Yeah, Chandra, in fact, just at the onset of pandemic, 9 months back, I talked about that the industry will grow industry will grow faster than what it has grown in the last 5 years. So I stand by that. And we feel pretty confident about the momentum. I think there is every reason to believe that our services business will grow in the double digits in the next financial year. Product business still early stages. We are seeing great optimism, but there is going to be some seasonality in this business. This was seasonally one of the best quarters. Next quarter, you will see a decline because of the seasonality. So for the product business, we'll take a little more time, but services business.
Overall, in terms of the annual guidance, even if you don't give an annual guidance, do you expect FY22, to see double-digit growth?
Yeah, that's what I said. We have not done the planning. I think there's a lot of client spending, which is looking optimistic. Our booking looks very good. So I don't want to call out a number, but I'm pretty confident of double-digit growth in the services business. That looks very much possible. Products, we will need to do more analysis because it has a very different rhythm, and we don't have a history. We only have 2 quarters after the first year is completed. I will wait for a few more quarters before providing a directional view on the product business.
Right. On that note, thank you very much, CVK and Mr. Agarwal, for joining us on ET Now, and hopefully we will catch up with you for another conversation very soon.
Yeah. Thank you, Chandra. Thank you.
Thank you so much. Take care, sir. Take care. Thank you, Arthur. Take care.
Bye-bye.
Bye.
Bye. Take care, sir. Bye.